Did you know that one Bitcoin ETF recently hit $20 billion in assets under management faster than any other ETF in history? Or that some analysts are projecting Bitcoin prices as high as $800,000 by the end of next year? These jaw-dropping figures are just the tip of the iceberg in today's exploration of Bitcoin's potential trajectory. So buckle up, crypto enthusiasts and skeptics alike, because we're about to unpack the most compelling evidence and arguments for Bitcoin's next big move. And trust us, you won't want to miss the shocking prediction we'll reveal at the end of this video. The current state of Bitcoin. As of the latest data, Bitcoin has been hovering in the $65,000 to $70,000 range for several weeks. This comes on the heels of one of the most significant events in Bitcoin's life cycle, the halving. Typically seen as a precursor to bull markets, previous halvings have led to impressive rallies. 2012, 185% increase. 2016, 122% increase. 2020, over 300% increase. However, this year's halving has been relatively underwhelming so far, with Bitcoin only up about 50% since the event. This muted response has left many wondering, are we in for a shorter, less explosive cycle this time around? The ETF game changer. But here's where things get interesting. Unlike previous halving years, 2024 has seen the launch of spot Bitcoin ETFs in the United States. This new dynamic has completely reshuffled the deck, sending Bitcoin to new all-time highs even before the halving occurred, a first in Bitcoin's history. The impact of these ETFs cannot be overstated. According to research by Galaxy Digital, the total addressable market for Bitcoin ETFs could be as massive as $48 trillion. To put this in perspective, BlackRock's eShares Bitcoin Trust became the fastest ETF to reach $20 billion in assets under management, accomplishing the feat in just 137 days. The next closest ETF, a JP Morgan equity fund that took a whopping 985 days to hit the same milestone. 3 potential scenarios. With these unprecedented factors at play, we're left with 3 potential scenarios for Bitcoin's market cycle. 1. A shorter, left-translated cycle with most gains already realized. 2. A traditional 4-year cycle with all-time highs and a market top in Q2 of next year. 3. A longer, more pronounced supercycle that could send Bitcoin to stratospheric heights. Now, are you ready to hear what the experts are predicting for Bitcoin's price? Let's jump into the mind-bending world of institutional forecasts and price targets. Institutional price predictions. One of the most prolific price predictors in recent years has been the digital assets research team at Standard Chartered. Their latest projection? A bold $150,000 Bitcoin price by the end of this year. But there's a catch. This prediction is contingent on a Trump victory in the upcoming U.S. election. Jeffrey Kendrick, head of Standard Chartered's digital assets research, stated, "As we approach the U.S. election, I expect $100,000 to be reached, and then $150,000 by year-end in the case of a Trump victory." This forecast is based on projections of Bitcoin ETF inflows benchmarked against gold ETFs. With current ETF holdings already surpassing $60 billion, we're already above their lower bound estimate, and we're not even halfway through the year. Wall Street weighs in. But Standard Chartered isn't the only big player making waves with Bitcoin predictions. Bernstein, another major Wall Street research desk, has set a target of $150,000 for Bitcoin by the end of 2025. Their rationale? The continued integration of spot Bitcoin ETFs with wirehouses and registered investment advisors will provide structural demand for Bitcoin. To put this in perspective, Bloomberg ETF analyst Eric Balchunas compared the introduction of these ETFs to putting a product on the shelf of Whole Foods or a big food store. The exposure and availability alone could drive significant growth. Interestingly, Bernstein recently updated their 2025 prediction to $200,000 after initiating coverage of MicroStrategy, a company known for its significant Bitcoin holdings. Independent analysts chime in. While institutional predictions are certainly eye-catching, let's not forget about the independent analysts who have been following Bitcoin for years. One particularly intriguing analysis comes from Peter Brandt, a veteran chart analyst and CEO of Factor LLC. Brandt's analysis focuses on the symmetry of Bitcoin's 4-year cycle. He noticed that the time between previous cycle lows to the halving is almost identical to the time from the halving to cycle highs. Based on this pattern, Brandt projects a potential cycle high in early September 2025, with a price range of $130,000 to $150,000. But wait, there's more. Remember Planned, the creator of the famous or infamous stock-to-flow model? Their latest statistical regression analysis suggests Bitcoin could hit $150,000 by the end of this year, aligning with Standard Chartered's estimate. But here's where things get really wild. The model predicts a price of $800,000 by the end of next year. Before you rush to remortgage your house for Bitcoin, remember that models are just that, models. They're not infallible predictions of the future. Even Plam's previous model fell short in 2021 when it predicted $135,000 by year-end, only to see Bitcoin top out at $69,000. A reality check. Now, let's take a step back and ask ourselves, are these predictions realistic, or are we caught up in a whirlwind of crypto euphoria? It's crucial to remember that while these forecasts are exciting, they're based on numerous assumptions and potential scenarios. The crypto market is notoriously volatile and subject to a wide range of influences, from regulatory changes to macroeconomic shifts. Now, let's shift gears and examine some of the factors that could influence Bitcoin's price in the coming months and years. Macro factors at play. One of the most significant factors influencing Bitcoin's price is the broader macroeconomic environment. Currently, we're seeing inflation trending lower, and there's speculation about a potential Federal Reserve pivot in September. If this comes to fruition, it could flood the market with liquidity, potentially driving more investment into risk assets like Bitcoin. It's also worth noting that Bitcoin's correlation with stock indices like the Nasdaq and S&P 500 is at its highest level since 2022. This suggests that Bitcoin is increasingly being viewed as a mainstream financial asset rather than a fringe investment. The political wild card. Another factor that could significantly impact Bitcoin's price is the outcome of the upcoming U.S. presidential election. As mentioned earlier, some predictions are contingent on a Trump victory. Regardless of your political leanings, it's undeniable that Trump has expressed support for the crypto ecosystem. A Trump win could potentially create a more favorable regulatory environment for cryptocurrencies. However, it's crucial to remember that political landscapes can shift rapidly, and campaign promises don't always translate into policy actions. The impact of any election on Bitcoin's price is speculative at best. The self-fulfilling prophecy. One intriguing aspect of Bitcoin price predictions is their potential to become self-fulfilling prophecies. If Bitcoin were to break the psychologically significant $100,000 level, it would likely lead to widespread media coverage. This increased attention could drive more interest in investment, potentially pushing the price even higher. As the saying goes, the price is the best PR agent. Each new all-time high for Bitcoin generates headlines and attracts new investors, creating a potential feedback loop of price appreciation. Risks and uncertainties. While the potential for massive gains is exciting, it's crucial to acknowledge the risks and uncertainties in the crypto market. There are several known unknowns that could derail even the most well-reasoned price predictions. 1. A delayed Fed pivot or unexpected rate hike could dampen demand for risk assets. 2. Regulatory crackdowns in major markets could create uncertainty and selling pressure. 3. Geopolitical events, such as escalating tensions between major powers, could impact global markets. And then there are the unknown unknowns, unforeseen events that could dramatically alter the crypto landscape. These could be technological breakthroughs, major hacks, or any number of unpredictable occurrences. Our take on Bitcoin's future. After examining all these factors, predictions, and potential scenarios, what's our take on Bitcoin's future trajectory? Based on the confluence of factors we've discussed, including ETF inflows, macroeconomic conditions, and historical patterns, we believe Bitcoin has the potential to reach the $150,000 to $200,000 range by the end of the next cycle. Given the slightly elongated cycle we appear to be in, this peak could potentially occur towards the end of 2025. However, it's crucial to emphasize that this projection is based on several assumptions about global economic and political conditions. The crypto market is inherently unpredictable, and unforeseen events could dramatically alter this outlook. The bottom line. As we wrap up this deep dive into Bitcoin's potential future, it's essential to remember that no price prediction should be viewed as gospel. The crypto market is notoriously volatile, and even the most well-reasoned forecasts can miss the mark. The key takeaway here isn't a specific price target, but rather an understanding of the various factors at play in the Bitcoin market. From institutional adoption and ETF inflows to macroeconomic conditions and political landscapes, a multitude of elements influence Bitcoin's price. As always, the most important principle in crypto investing is to do your own research, DYOR, and never invest more than you can afford to lose. Manage your risks wisely and approach all price predictions, including ours, with a healthy dose of skepticism. Now, we want to hear from you. What's your personal price prediction for Bitcoin by the end of this year, and how about by the end of 2025? Do you think we're in for a shorter cycle, or are we at the beginning of a prolonged super cycle? Remember, the world of cryptocurrency is ever evolving, and staying informed is key to navigating this exciting space. So keep watching, keep learning, and who knows? Maybe we'll look back on this video in a few years and marvel at how accurate or wildly off base these predictions turned out to be.